Welcome to a Sifter Fund special report on interesting companies. My name is Alexander, and today I'm going to talk about a 50-year-old Norwegian company called Tomra Systems and why we at Sifter decided to invest in it. Tomra is in many ways the perfect ESG company, as its entire business revolves around the reducing, reusing and recycling plastic, metallics and other sorts of waste. It's a very interesting counterweight on the very oil and gas heavy Norwegian stock exchange. Over the last 10 years, this company has grown its revenue by close to 260%. And this is a compounded annual growth rate of 14%. So how has this company achieved this and what does the company do? Well, Tomra operates three somewhat interrelated businesses. Tomra Collection is the most interesting part of the business and it represents half of the company's total revenues. This segment manufactures and sells so-called reverse vending machines. These are automated machines that are used to collect plastic and glass bottles as well as metal cans in countries that run a so-called deposit return system. Another very important segment is Tomra Recycling. This segment manufactures and sells sorting equipment for the waste management industry. For example, a company's sorting machinery can be used to separate recyclable metals and plastics from a waste stream consisting of a wide variety of waste. The last segment is then Tomra Food. Tomra Food manufactures and sells sorting equipment for the food industry. A typical use case would be a sorting machine which scans and analyzes raw foods and sorts them into different categories. For example, an apple producer would use Tomra machinery to separate good apples that can be sold to supermarkets from good but perhaps slightly ugly apples that can be sold in supermarkets but can be sold to juice manufacturers. And also separate these from the bad and rotten apples that are discarded altogether. So in a nutshell, the company manufactures and sells automated equipment for collecting and sorting plastic, metallic, food or other waste. So let's dive a little bit deeper into these segments, starting with the Tomra Collection segment, which is the most important asset of this company. And it also represents the company's roots, as the company started this journey in the 1970s by building reverse vending machines. And this is what this company still does to this date. It builds and sells reverse vending machines. These are automated machines that collect plastic and glass bottles and metal cans from its users. This is a very important part of the value chain in the so-called deposit return systems, in which recyclable bottles and cans come preloaded with a small deposit fee, which is then returned to the customer whenever the bottle is returned for recycling. Taking this plastic bottle, for example, this has a deposit fee of 10 cents, and this 10 cents will be returned to me when I return this bottle to a Tomra machine. Many European countries and even some states and provinces in North America and Australia are utilizing a deposit return system to recover the vast majority, we're talking about more than 90% of plastic bottles from the market. The system works by incentivizing consumers to return empty containers to a retailer, most likely through the interface of a reverse vending machine by Tomra. The system is pretty much self-funded and run by a non-government organization that handles the administrative payments between consumers, bottlers and recyclers. And it's the only proven method of actually recovering a large majority of recyclable plastics. And this kind of system has been used in Sweden since 1984. So this kind of system has a very long tradition in the Nordic countries and pretty much pioneered by the Scandinavians. Hence why Tomra, a Norwegian company, is the leading and in fact inventor of the reverse vending machine. The company got its first sales outside of the Nordics in 2006 when Germany introduced the deposit system. Since then, there's been occasional adoption across Europe, with Romania and Hungary being the latest adopters in 2024. There is also a very big upside to come to this industry within the next 5 and 10 years. The European Union more or less demands its member states to introduce legislation supporting the adoption of deposit return systems by 2029. The EU also has chosen this path, as this is the only way to achieve a recycling rate of more than 90% of plastic bottles. No other systems has come close. Thus, there's a large upside potential from this market alone, as only currently 1/3 of EU countries, measured by population, are covered by a deposit return system. In addition, there are non-European Union states that are also invested and interested in this kind of system. For example, both Uruguay and Singapore has committed to introducing this as of 2024. So how does TOMRA make money? Well, the biggest upside naturally comes when a new country adopts recycling legislations, because then there's a lot of machines sold during a very short time window. These machines cost roughly 20,000 euros on average, give or take a few thousands. And these are sold to a new country over a period of 1 to 2 years. These machines will last for about 10 years, after which they are depreciated and replaced by a new unit. Therefore, this can be seen as a recurring revenue stream that repeats in the 10-year cycle. Another source of recurring revenue is the servicing of these machines, which is roughly 20% of the segment's total revenue. Is there competition? Well, yes, but it's very limited. This is a very niche market. It mainly provides opportunity when a new system is adopted in a new country. TOMRA has a very tremendous advantage here, as it has the scale advantage to produce reverse vending machines cheaper than competitors, and it also has a 50-year-long track record of successful operational performance. It's no surprise then that this company has a 70% market share in reverse vending. Alright, that's enough about reverse vending. Let's move on to recycling. TOMRA Recycling has a very similar trait as of collection. Namely that the end market drivers are kind of similar, the long-term goal of achieving recycling and greener economies. TOMRA Recycling sells sorting machines to industrial customers and the waste management industry. They use them to sort and recover recyclable materials using various technologies like X-ray, 3D object scanning or machine vision, depending on the material being sorted. There are again legislative forces operating in the background that favors the outlook for this industry. For example, the European Union has set very clear goals for its member state to increase the rate of recycling for municipal waste from the current level of 50% to 65% by 2035. Similarly, Asian countries that used to be used as a landfill for Western countries are no longer accepting import of trash. This creates pressure for these Western countries to recycle their trash themselves in order to slow the rate of domestic landfill growth. The business case for TOMRA Recycling is quite similar as of TOMRA Collection. The big difference is that the sorting machines costs up to 100,000 euros or more and will last between 10 to 20 years with annual recurring service revenue. TOMRA is likewise enjoying scale advantage in this niche market, as they have a 50% share of the sorting equipment market. Lastly, the food segment. This is the black mark on an otherwise great business. The food segment has not performed that well in recent times, mainly due to macroeconomic headwinds affecting the entire industry. The food segment is a result of 3 major acquisitions that were made in the last decade or so. The goal here was apparently to consolidate the industry, reduce competitive forces, and therefore achieve pricing power. However, this has, as of today, not materialized, and the market for food sorting equipment remains very fragmented, with TOMRA only having a 25% market share. However, the company is making serious attempts at restructuring the business to hopefully improve margins over long term. So what made us become interested in TOMRA? Well, TOMRA as a business displays several qualitative criteria that we use in our investment selection process. Firstly, the company is clearly positioned in an industry that presents long-term secular growth opportunities. We as humans must improve our waste handling and recycling processes if we want to continue thriving on this planet. TOMRA will be one of many key institutions on this path. Secondly, the company is by far the market leader in reverse vending and also sorting equipment for the recycling industry. The company is about 10 times larger than its closest competitors in reverse vending and about twice as large than its competitors in recycling. Why is this good? Well, it gives the company competitive advantage in the form of scale of operations. The company can build more machines at a cheaper price than its competitors, and the company has a 50-year-long track record of operational excellence and R&D innovation. Lastly, the company offered an attractive earnings yield at the time of investment in January 2024. The price has since then somewhat appreciated, but we still believe that the company's price does not fully reflect its long-term earnings potential and the strength of its underlying business. So are there any risks with TOMRA? Well, of course, there's always risk when you invest into equities. The main risk in this case is perhaps the fact that some of the customers of TOMRA are so-called unwilling customers. What I mean by this is that The buyers of TOMRA equipment are usually forced to do so via regulations and laws. There's therefore a significant political risk that the future revenue stream of this company is exposed to this kind of political shenanigans. For example, the European Union and its legislative activity is the biggest impactor on the company's future. A concrete example from recent history is the fact that both France and the UK, which are potential very huge markets for TOMRA, have so far deferred the implementation of a deposit return system for another 4 years. These countries currently don't see it worthwhile to spending on this kind of project. So if we zoom back out a bit and look at TOMRA in its entirety, we see a leading company that is well positioned to benefit from investment into a greener economy. The company can probably grow its revenue by more than 30% over the next 5 years, with the bulk of this growth coming from deposit return system introduction in European countries, and perhaps increased investment into waste recycling machinery and capacity. In addition, one can envision small gains in the company's operating margins due to growing economies of scale and the planned restructuring of the food division. This growth is well protected from competition. As the company is the largest company, operating in a somewhat niche market, it gives the company scale advantages. The company's products are well known for its performance and reliability, and the install base alone provides a solid backbone for service-related revenue. The Sifter Fund invested into TOMRA at the start of 2024, and we still believe that the company offers an attractive value proposition to long-term investors from its business perspective, but also from its aims and goals to reduce the number of problematic waste in the world we live in. Lastly, I must highlight that this video is not investment advice. The opinions presented here today only present our current view on this company, and this may change at any point. Still, we hope you enjoyed this video, and we would appreciate if you would like this video and subscribe to our channel. Thank you.